Right, not least because of the tariff news. How should they be gearing for that? I mean, it seems like a lot of talk and then not much action, but then at the same time, there's this steady drumbeat of tariffs that are actually going into effect.
Yeah, I mean, listen, most CEOs, they start with, by and large, in every industry, they're excited and optimistic about regulatory relief and maybe more of a cost-benefit analysis on regulation. So that's a sign of encouragement. There's a hope that we will have a more organically driven, private sector-led economy. On the other hand, it's unclear how the DOGE project will unfold and how much cuts are we going to be able to do at the federal government level. It's unclear how far we're going to go with the deportations and whether we're going to have significant, meaningful workforce growth, or might we inadvertently shrink the workforce? And a lot of companies I talk to are very concerned about being able to find workers. And the tariff issue is about supply chains and logistics, and in particular, relating to Mexico and Canada.
Right.
If you're going to have trade dispute with China, you want to have ideally the ability to reshore and use Mexico and Canada to some extent for logistics, supply chain arrangements, but those aren't completely clear either. So just people are going a little more slowly, putting one foot in front of the other. But the impact of going more slowly and more deliberately is maybe you're not going to be as aggressive here for a while as you might have been.
I just wonder, Robert, it's Brian, what the Fed can do about things like home insurance rates or auto insurance. You know, we saw owner's equivalent rent go up, and I'm thinking, well, if you make it harder to buy a home, people have to live somewhere. They're going to rent because they can't afford to buy. So rents might actually go up. I just wonder what the Federal Reserve can do when it comes to some of these insidious forms of inflation that are not just necessarily tied to a slowing economy.
So we're in one of these rare periods. If you look versus the last 5 or 6 years, I would argue the Fed is shifting for a while here offstage. We're moving to a more whole of government approach to economic policy and fighting inflation. So some of the issues you talked about, the Fed can't do a lot. Also, I think, and I think Scott Bessent may have said this, I think the administration's more focused on the 10-year Treasury than the Fed funds rate and moves they can make that might keep this term premium on the back end from inching up, which is affecting the cost of a lot of financial services that you just talked about. It's affecting rents, it's affecting mortgage rates. And so I think for the time being, I think you'll see the Fed kind of move a little bit quietly off to the side, be more muted, try not to be in the middle of the headlines, and fiscal policy and other executive actions, the federal government are more center stage. And I think you're going to see, again, a more whole of government approach to dealing with these issues. And we're in the middle of that, but we're in the early stages of the middle of that.